With each click the world will change, boundless joy we can arrange. Knowledge from the best we seek, whispers of success we speak. Guided by our mentor's light, trading till the morning's bright. Wisdom carved in ancient codes, find the secrets on these roads. Every gain and every loss, pay the price and flip the toss. Fortunes made and debts allayed. Candlesticks like midnight stars, every trade a brand new start. With each click the world we change, boundless joy we can arrange.
Create a song talking about day, trade in the freedom it provides, money, location, time, freedom, as well as mentioning essential traders, university, since that is what I run and where I teach my students how to trade. How to trade.
Yo, hello, can you guys hear me? Alright, so today I'm just gonna go over real quick how to journal your trades properly, because I think a lot of people don't journal in general, which is straight off a red flag. First of all, you should be journaling. Let's see. Hold on, I got a Discord DM. Yeah, but today I really, on the live, just want to, no webcam or anything today. I just want to have a chill stream, just talk about journaling, why it's important. Like, you need a journal. If you're unprofitable, like, think about it. If you're unprofitable, why are you not journaling? You have, like, no excuse to not journal. So whenever like I see someone unprofitable, they come up to me and ask me, "Yo, can you give me some free advice?" First of all, there's no such thing as free advice. But second of all, a lot of times I would say, be like, "Well, do you journal your trades? Can I see your past trades you've taken?" And a big majority, not everyone, but a big majority of people, they don't have trades to show. If you don't have trades to show, how can you get better? Like, I don't believe, to an extent, you're not going to remember every single trade inside your brain. Your brain is not a storage device. Like, yes, you'll gain experience and maybe some discretion is what people call it in trading, that you don't need to write down on a piece of paper. You store in your brain. But in terms of individual specific trades, like, you're not going to remember each one. I don't remember each trade I take. Why don't I just put it down in a journal? Journaling takes only like max maybe 30 minutes. That's like on the high end. Like, once you get used to journaling, you can finish all your journaling within 5 minutes. Okay, I'm sure you have 5 minutes of your day. Like, there's no way you don't have 5 minutes. You can sleep 5 minutes less, and it's not going to affect your REM cycle. So yeah, for people that don't journal, it's just, to me, it just means you're lazy, or you have a negative view of trading in general, like a negative mindset, and that's obviously not going to work in the long run in the first place. So it does show like character, who you are, stuff like that, just by seeing whether or not someone journals. But in today's video, I will be going over, I don't know why my trading views, why is it like, yeah, why is it like that? It's not taking up the whole screen. But yeah, I will be going over today, like I said, how I journal. I'll go over some trades real quick taken this week. Like, things to look out for first. Wait for me a few more people to join the stream, and then I'll go over that. But aside from that, then we'll go straight into the journaling part. Okay, I'm gonna do a poll real quick. What day is it? It's Wednesday. Yeah, so I was gonna poll to see how you guys are trading this week, but the week's not over yet, so let's do a poll on how many people here journal, because that's important. And if you're wondering what journal template I'm going to show today and what I use, it's free. Okay, as long as you join the course, you get access to an entire journal template for free. I used to sell it separately. If you want it separately, you can DM me we'll see where you are in your trading, but for the most part, to get it is just free. If you just get access to the course, I'll send a link there to get access to the course. The Black Friday sale is over. The code should not work anymore. If it does work, then I guess you lucked out. But yeah, you did get access to the journal complete for free within your purchase of the course. And this journal template, it's not just a template. It has all my past trades I've taken in there up until I believe June, if I'm not mistaken. So I believe up to June of 2025. There's just plenty of trades you can look through. There's like 680 trades in there. So not only do you get to learn how to trade from the course, you also get access to all the private Discord channels, and you get access to seeing the insides and outside of every single trade I take in the journal, and you can learn from that. So there's so many learning resources that you get included with the course that you guys should be good to go. But if you do need one-on-one help, there's obviously the mentorship. But I'm gonna wait just a few more minutes here to see if there's more people joining. It's a later stream for sure. Otherwise, I'm gonna go over a recap, going over basically the trades of this week taken. Again, like if you see a lot of my trade recaps, I'm taking the same trades. Like a lot of people don't realize this, but like it's to the point where my trading is pretty mechanical now. My A+ setups are basically the same trades every single week video. Price may deliver slightly differently. Ideally, price delivers the same for the most part, but there's certain criteria for that. Let's see what the poll says here. All right, how do I see the poll on mobile? Yo, where did I see this? Hold on, give me a second. Let me see. I got to answer a Discord DM real quick from a student. But it seems like 2 of you guys journal. We have 8 people watching, so the other 5 of y'all better vote in the poll. Two of you guys journal. 1 of you guys say you don't journal. The one that doesn't journal, I hope you're saying no because you're consistently profitable. At some point, once you're consistently profitable, you know what you're doing. You know literally get the criteria of your trades. You have no psychology issues. Then that's when it's okay. You can drop the journal because you've got enough reps in, just like me, and you don't need something to hold you accountable anymore. Otherwise, you do need to hold yourself accountable. I don't know why some people think like just because I don't journal anymore doesn't means that they don't need a journal anymore. That's not, you cannot compare apples and oranges. So until you reach consistency, keep journaling. It's a good way to collect data and build confidence, and it helps you in periods of drawdown because you go back to your journal and you'll notice, oh, wait, I've been in this drawdown before, but I've always came out of this drawdown. Like, it will build confidence so that you don't go on tilt when you're trading later in drawdown. What's up, Mike? Another thing really I'm gonna go over today also is like what to include in your journal. I've tried to simplify my journal down to an extent. I'd say right now, because some people do find some things too extensive, and I'll also realize like I'll explain the process of journaling honestly for the most part as to like what you should keep in terms of data and what you should not. There's definitely times where there's things that you don't need in your journal and they don't help with like in terms of improving your trading, and they only would help with, for example, something like if I can think of something. Like they would help you identify which trade is which, but you should know that. You should have a link to your trade right next to your journal. Did anyone cash this long today, by the way? On NQ or ES? It's basically the same setup, I believe, on both, if I recall correctly. It did happen a few minutes before open, so it just depends when you're on the chart. Sometimes like I'll be on the chart like after open, so I'll miss the setup. Sometimes I'll be on the chart before open, but I try not to take a trade before open unless it's a really good setup. This is a really good setup because this is basically my A plus trade criteria. So if it's meeting like an A plus trade, I'm gonna take the trade for the most part, unless there's some other reason. But I try to keep things like mechanical, so there should be no reason not to take this trade. Essentially, as long as it's meeting my criteria, it's a good trade. I'm taking it. Like momentum to me just means there's momentum also to the other side. Like people get scared of momentum when they see it, but for me, it's a sign of drawing liquidity. If I get the right POI, get the right entry model, there's a huge gap, and those gaps get filled in trading. So it does provide me extra confidence in my trade. I did also see some course members and some of the pay members also posting in the group chat. Like, I think some of you guys like got stopped out or something. But you got to make sure you're taking proper trades. Some of the trades I see in the group are just not correct trades from a mechanical standpoint. It's not even in terms of like anticipation of PY is wrong. It's just mechanically incorrect. So make sure you're taking like correct trades that make sense, that are in line with the system, and not random trades. I'm still optimizing my strategy. Darren, I think I saw. Were you the one saying the back test in the Discord? If that's you, then yeah, I saw it. I think your back test looks fine. I think main thing is your win rate is slightly on the lower end. You might want to question yourself to see if you can psychologically handle that trading live. If you can, then it's fine. If you can't, you gotta change up your risk reward and win rate. So Try to sacrifice some risk reward, but in the meantime, bump that win rate up. Okay, we have 5 votes here. 3 people say yes, 2 people say no. So 2 people here saying no. Yeah, I want to trade with external sure, but sometimes. Hold on, I'm gonna mute my mic real quick. Give me a second. I forgot I was on mute. How many people here, I'm just out of curiosity, have done back testing on like at least 500 trades? 500. I think some people don't even do back testing at all, which to me is just crazy because I could never go live with my own capital trading, not knowing my data. Yeah, no, this trade doesn't make sense. I've been doing a lot of trade recaps also. I noticed in like the past 2 months have all been trade recaps. I mean, I did do a beginner's course. Um, their turnout, I guess, wasn't the greatest. Didn't seem like a lot of people were beginners on my channel. I even ran a poll. I think it was like 40%. Yeah, so like 38% roughly were beginners. So you could say almost half. But people did find the trade recaps more helpful. So that's why I continue doing those instead of like a beginner's kind of thing. Also, I find like trade recaps a lot more fun to make. Doing beginner content, no offense, but it gets really boring. Like, I don't want to teach people how to read a candle, to be honest. There's plenty of other creators and YouTubers on YouTube that you can learn from that can teach you how to read a candlestick. I personally think that's not going to be my job. My job is to teach you guys the strategy, the strategy, not how to read a candlestick. Most people know how to read a candlestick within like a few months. I wouldn't even say a few months, like maybe a week. Yeah, frequency matters, but you do want to keep in mind you still want a solid equity curve regardless of how good your frequency is. If your equity curve is not smooth, the frequency is not, I personally don't think it's going to save you, just because the room for error is a lot smaller when you're taking EVs that are like very close to zero. You have 420 trades. Do that times 10. Come back to me. If you do that if you do 420 times 10, you should get to basically the amount of trades that I've done in total back testing. Should get to like an elite level by then. But make sure like you don't blindly back test. Some people blindly back test and it's not helping them. I was even talking to someone recently too regarding like super high frequency trading. But very low EV. Low isn't still positive, but just much closer to zero. It's hard to execute depending on what the difference is. If the difference is risk reward, that's gonna make your EV go from break even or negative to positive. It's gonna depend a lot on your stop loss size. If it's win rate, then that shouldn't be a huge issue. Like my point, what I'm trying to say is your win rate is not really going to get affected by spread as much as your risk reward. Risk reward is gonna spread is gonna affect your risk reward much more. The thing that amazes me is like people ask for like prop firms to give better trading conditions, things like that. Like it's cool and all for like to pick a prop firm that has the most ideal trading conditions. I'd say most of them are honestly pretty similar in terms of their trading conditions that they offer, like across the board. They have to be. I mean, there can't be a prop firm that's way too easy, or there's one that's way too hard. Then they're not gonna have business. One's gonna steal. Actually, no, they're both not gonna have business. One's gonna run out of business because they're too cheap. The other one's gonna not have business. So I'd say like jumping prop firms is never a good idea. It's not the reason why you're unprofitable. You're unprofitable because of you yourself and your strategy. It's nothing to do with the prop firm, broker, like people that I remember like when people were transitioning to what was it, futures, like when futures became popular. I remember people in the community were like, "Yo, I can finally trade with no spread," and they were very happy. But then like if you ask them like, "How's your trading progress going?" They're still unprofitable. So like, what difference is not having spread gonna make? If spread is gonna be a determining difference between you unprofitable and profitable, I don't think your system is a good system. Like good as in not the frequency. Sure, you can make a lot of net risk reward, maybe, but your EV is definitely not that high. If spread is gonna be a determining factor, if you're profitable or not. It was just pretty silly to me when I heard about it first time. I was like, that's crazy that these people are talking about like how this is gonna change their trading and all that, but nah, it's not how it works. That's why like Top Step did change their payout rules now. It is I wouldn't I mean it is harder in a sense I guess to get a payout, but as long as you can maintain consistency and make more than your previous balance, I believe is what the rule was. I don't know if it's in effect immediately. You guys that trade Top Step, let me know. But it said like some soon on their website, so I'm assuming soon. I don't know when that is. I think what Top Step is doing is they're probably gauging what the community is reacting right now to this new rule. If it's a lot of negativity, they probably just take back the rule. I will say though that accounts are cheaper now, so you get it for like half off. $89 instead of 200. It's a good deal if you can pass accounts consistently. I mean, you can literally get double the funding with half of your ROI. You're basically doubling your ROI by so much. Like you can get like an easy, what's it? Now it's more than 20x. Now you can easily get a 40x ROI per account through just one payout. That's basically the power of prop firms. And you just gotta take advantage. $4,000 feels like a headache. Look, it's not a headache if you love trading. That's all I'm gonna say. I think there's nothing wrong with learning and getting into trading for the money, because obviously that's like the end goal everyone has. But like, you also gotta have some passion for the art, you know? It's like people like majority. I'm not gonna say everyone because Jokic is maybe him with horse racing is like something else, but like I can guarantee a big majority of people that made the league, NBA, NFL, at least their first year. I mean, before it became a job, you could say they had a lot of passion for the sport. Like money is just like a byproduct of their passion. That makes sense. Like money is their motivation, but without the money, they would still be playing basketball. Same way you should view trading too. Think. Oh, let me see. Someone sent me a Discord DM. I think you don't even need a full year to get to 4,000 trades back tested. It depends how much you really want it. Like I know a few of what's it called? Students have gotten not to 4,000, but in the thousands, like 2,000 trades back tested. Back tested plus journaled. Journaled as in like combining the two, if you will. So it's not some crazy stretch. Yeah, strategy is the most important thing in the beginning, not psychology. There's too many trading videos online about psychology. But like you gotta keep in mind the people watch the psychology videos. I mean, don't get me wrong. I'm sure there's people like that have a problem strategy, and their reason of not being profitable this whole time has been psychology for sure. Like, don't get it twisted. But I just think if you can't confirm that first part of an edge, um, thinking it's about psychology, you're gonna be in an endless cycle that's never gonna end. If that makes sense. Now, whether like how much you back test honestly will also depend from person to person. Some people think they're very confident in their abilities and their strategy early on. You can stop back testing earlier because every day or every week that goes by where you're not trading your system live, you are actually losing money. Like you're actually losing money. This could be time they could spend working on your system. Some people might need 1,000 trades, to build confidence trading something live. Some people may have a lot of conviction. They may think, you know what, 400 trades is good enough for me. I've seen like a big range of numbers for back testing. It does vary from person to person, but I think a general guideline is you need a minimum of 100. Obviously, 100 is like minimum requirement. If you can't even get to 100, you gotta keep going. I've had mentorship students that have gone like live trading and also full time, and they only, not to make you guys put less effort into your trading, but quite a few of them have only done, I think one did about like 400-ish trades. The other one did a bit less than that for bad testing. So like keep in mind, you don't need to hit 4K like me. You don't need to even hit 1K. But like if you're someone that does not have confidence in your system, or obviously if you're not seeing positive results, then obviously you need to change something, right? You can't just continuously bad test. You gotta change something. This is why like trading is a very unique skill. Everyone's like journey is so different. I would say a pretty big cycle I do see for the mentorship students that do come towards me. Most people that come for me for the one-on-one have been training for 3 to 5 years. Like if you guys fill out the form for the one-on-one, or if you guys have seen it before, you know that I ask you like how long have you been training for? You know, basically how long you've been unprofitable for. Because if you're profitable, for the most part, I've had at least one person fill out the form that actually is already profitable. He told me he just wants to optimize his system. He wants me to look through his data and try to help him like figure out how to improve it, which is also another service I do for the mentorship. It's either you learn my strategy, I help you learn and master it, or you need help optimizing your strategy, finding ways to improve it from a technical point of view. Like, yes, I'll look at the numbers. You know, I'm not like the most smart data analyst dude in the world. Okay, not the most crafted or skilled at Excel or Google Sheets, but I do know trading. So giving you technical advice, mechanical advice you can implement to your system is what I can do. That's why people, at least that one person, came to me asking for me to just help him optimize and improve his risk reward, like optimize it, make his trading more efficient, trading live instead of getting him profitable. Like there's people that do come to me that are already profitable, but for the most part, a big majority I'd say are people that come to me that are 3 to 5 years unprofitable, but they find success within the 2 months or 6 weeks. So it just proves to show, I mean, put in the effort, invest in yourself. If you want to learn at your own pace, that's fine too, but it might take 3 years, it might take 5 years. Some people just don't learn well. Like some people just can't self-learn. And, you know, there's nothing, I wouldn't say there's anything critically wrong with that. People just learn differently. Okay, I'm gonna go over the live trades now. All right, the trades I took this week. Even I think if I have last week's trades on the chart, I will look through those. And yeah, I'm gonna pull it up on my trading view now, and we'll go over each one real quick. I don't want to make this stream too long, probably like an hour max ish. In the meantime, vote in the poll about journaling. 100 bad tests a day. It's not horrible. We have more people joining now. It's 11:27. Damn. All right. Let's get this started. All right. I don't know what happened to the 8 people that just dipped, but they're missing out on the trade recap here, which is fine. Okay. This setup, like I said, we'll go over from top down, but this setup is very, very, very simple. Extremely simple. All it is, I mean, you don't even need to go to the higher time frame. Ignore this. I was drawing. I was trying to teach someone something with this drawing earlier, but like looking at higher time frame, I'm not even looking to anything on the left here, to be honest. I know all this at some point is going to get ran as liquidity because on a higher time frame, we are bullish. We swept this major low. This might be a daily low. Yeah, it's a daily low. And we're bullish on the higher time frame. We already finished the downtrend. So during this period of time, you should have been downtrending, shorting here, right? I'll probably say longing here, to be honest. You wouldn't know if this would hold or not at the time. So you probably would have longed there. But point is, you should be longing here because we already did the liquidity sweep. Now, if you go to, I think it was the 1 minute, to be honest. 15-minute structure, we have a liquidity sweep. We made a new high here. So this is strong low. This low should not get violated. So that low should hold. That means I'm longing here. When we come back here, I'm going to look for longs here. There's nothing on the 5 minute. There's something on the 1 minute. Just because there's nothing on the 5 minute doesn't mean this is not going to hold. There's something on the 1 minute unmitigated. 2 POIs here. So this is the origin here. So I'll mark it as the origin. And we got an entry model after tapping it, okay? We had an OB entry model. Now, if you wait it after market open, this is how you should be entering. You take the stop hunter because you missed the initial entry. This is your stop hunter because this low made a new high. So your stop hunter, you enter here, stop at the low. This is your 4 sword I was talking to people in the group chat about. For people asking, this is the 4R stop hunter setup. This is if you missed the initial OB. There's also another OB here you could have taken. Both of those are fine for this trade here. And of course, I don't manage to break even on this because this isn't a setup. This is a good quality trade. No reason to manage really to break even. From my data, I let my A and A plus run. Unless there's something that makes the quality of this trade lower than A, then I'll go break even. What I'd really liked here was this massive imbalance we left here. These will get filled. And just because it gets filled doesn't mean I'm shorting up here. I'm going to still long up here. The reason why is because we're still bullish, like I said. This liquidity sweep, this low should hold. If this low, what does holding a low mean? Holding a low means we don't violate the low and we make a new high. So look, we made a new high. Right here, we made a new high right here. I think on ES, it took a while to even make that new high. Look. Or sorry, it took out the high quicker is what I meant. I think 1241. So there was an SMT 1241. Wait, sorry, that's the wrong high. This is the high here. Wait. Where's the extreme ES high? Right here. This is the next high. So this was the ES high. It got taken at 1259, around there. Close enough. Like close enough to here, roughly. This was your SMT. But keep in mind, this is a SMT. I don't care if you call it bearish or bullish SMT. The point is, this here is not where you want to be shorting. If you're looking for A plus setups, you should be longing this still, even with this SMT. Why? Because we're still bullish. We haven't taken out the high yet on NQ. When we're bullish, we should be taking out highs on both assets. Now, there are 5 times, like if you guys remember the trade I took on live stream for, I think it was the 3R stop hunter, we did end up not taking out NQ and we held it or we didn't take out both highs, right? So keep in mind, there is a probability situation in both situations where like something could happen, something could not happen. I also had my TP originally at the highs, but I moved it because from my data, I know my trades ideally don't last as long at all. There's times where it just takes forever and it might not hit my TP. The main concern I have is that it doesn't hit my TP by the end of the session, which luckily it did. I think where's the high? Yeah, luckily it did here around like 3. This is very late. I'd rather just take my profit because I think it's only a 1 hour difference. Yeah, so about only 1 hour difference. I would be sacrificing here 6 risk reward for the sake of a 1 hour difference. To me, it's not worth it, especially after I've been holding this trade for this long. If price was a lot more volatile on this day, then I could argue, sure, you can keep holding it because it should hit TP soon. But I don't like it when candles, when price moves very slow. Now, what is good when price moves very slow is there's a new trend that develops when price moves very slow. You have a setup here. You can use the limit order because small range. This is your internal swing continuations. There's a 3R trade here. If you go in the 5 minute, there might be something here. Yeah, see? So I don't even need to look at the 5 minutes to know there's something on the 5 minute. There's something here. Now, depending on where you put your stop loss, you might actually take a loss here with a limit order. So you would take a loss here on the limit order. If you cover structure, you would still be in this trade because structure, the low that made you highs here. So if you cover this low, you're fine. But the risk reward is really bad here. I wouldn't take that personally. I would look at the risk reward and see if it's not worth it, then look for an entry model. There is an impulse delivery here. Not an A+, but the leg closest to where price hit the PY did give an impulsive delivery. Hence why price never came back fully. I mean, it did come back here, but this will be your impulse entry. You target here. Like, there's a lot of setups here if you miss this initial one here. Some of these setups will make you more money. Like my sis risk reward here. Are you thinking wet fish below 600 and before pressing up to set? I don't know what wet fish is. I'm gonna keep it a buck. Is that a futures thing you could trade or something? I don't know. I don't know what that is. Anyway, point is, like, this is sis reward I caught. But you could have easily made 6 here as well, taking these 2 continuations. And if you caught even like another continuation here, to me, I don't think this meets my criteria for a trade here. I guess sure, I did go to discount here for this new internal range, but there would be nothing for me here at this point in time because to me it's not as clear for making new internal swing structure. Once we have these 2 breaks up here in a bigger impulsive leg like this, I think at that point it's a lot easier to take trades like these 2. Too early, it's too hard to say. Okay, leave a like on the stream. I'm gonna add everyone right before I start the journaling section today. So these are examples of how you could have traded this day. All right. Now, let's go over. I think I've gone over these trades. I'm pretty certain. This is a break even. This is a -1. This is a 4R targeting its supply above. Again, just trading with the trend. Pretty certain. Oh, I missed this trade too, because I had this supply marked out. Oh well. Oh wait, no, sorry. I think I was asleep during this time. Break even trade. Slept pretty early or something. Anyway, let me see if there's anything on gold that I have not gone over. I need to go back every time I record a trade recap. I have to go back and rewatch my videos to see if it's a new trade or it's an old trade that I haven't recorded a recap for. That's so funny. People dip at the live stream when I start doing trade recaps, but they stay when I don't say a word. That's crazy. I can go over this day real quick. This is very simple, to be honest. We're in a downtrend here on gold. Stop Hunter. I know someone else also in the group took this setup as well. I'll mark it for you guys. That's your internal sweep. I just covered the next high right here. You can cover also 2 highs if you want. It's up to you. This is fine with me if you cover these highs even further. There's a PY right above, so you could cover that too. But my ideal for my back testing is 3-year sword. So I try to limit my stop loss to that 3-year sword. So that's a 5-year sword. Here's a 30-minute supply, or sorry, demand. That obviously got pushed straight through. But again, keep in mind, to me, this doesn't matter if it gets pushed straight through. This is just a sell to buy PY. So it's not the entire demand zone. This is fine if it gets broken through. I'm still taking a trade. We hit a 1 hour here, so go here. There's a 1 hour PY. Again, I'm not going to just mark this and be like, oh, if we miss this, I'm not going to long down here. No. If we hit this, I'm also going to long. If we fail there, I'm also going to long down here. Like, I'm a long here and long here. If I take a loss here, that's fine. Some people think like I can predict the exact POI. And it's just like crazy to me because like some people think I can predict the exact POI price in reverse from. I can't. I wish I could. That'd be cool if I could know like if price can go for a flip or an origin, but I can never predict that. What I can predict though is highs and lows being taken out. But I can't predict something like this. Like I wouldn't know. If you guys journal and you find something, let me know. You'll be a magician. I'll upgrade your role in the Discord server to like, I don't know, Prodigy, next J trades. But until then, I don't know which one's holding. So that's why I mark the basically the next high time from PY, and that's the 1 hour here, and it hit to the tick. And because it hits a tick, I take my entry model. For me, there's an IFG. I don't know if there's a gap there. It closed above both either way. There's IFG. 4R, really straightforward trade, just targeting the supply right here in premium. Now, I'm not shorting at the supply, by the way. Okay, the reason why was also because time. You know, this trade took way too long to play out for me. 4 hours, right? I'm not interested in holding this trade after. I don't like holding trades from over spread hour for the most part. Unless I'm in like a very big swing trade, I think I can swing very far, but I believe at this time I wasn't looking to swing anything crazy. But like a TP here doesn't mean I'm going to take a short here. The only reason why I didn't take a short here is because this isn't a supply I would short from. I'd probably short from this supply above here. And you can even see then, I mean, the shorts are not going to go all the way down here because we hit high time frame 1 hour demand. So keep in mind, if we hit 1 hour demand and on a 1 hour bullish, where do you expect price to go? Like, supply is going to fail every time. I would be longing here, following this new right trend, because when the right trend aligns with the high time frame trend, that's really good conditions to trade. It's the same thing with NQ. When the right side trend There's always a trend. There's a trend on the left, there's a trend on the right. If the right side, internal swing structure, new value that gets created is following the high time frame trend, this is amazing conditions to trade. When it's going against the high time frame trend, like if it's going down like this, not as ideal. You can take counter trend trades going towards demand if you want, but like for example in this case, the only short you could have taken was here, which went like 17 risk reward or something crazy. Let's see if there's anything else trade wise before we hop into the journaling today. What other trades were here? 5 hour. These are kind of. This was a week ago. I don't think I have any. I think I cleared everything out before. Okay, yeah. Some trades just gone in between, but that's fine. Yeah, okay. Anyway, I know some people even clear up their trading view like literally right after they take the trade or right after they journal, which is fine too. Like you don't have to keep it on the chart all the time like me. The only reason I keep it is so I can get a trade recap out for you guys. Because I'm kind of lazy at times. I don't always record a trade recap as soon as after I take the trade, you know. This is very bad, guys. The poll is looking very bad. 50% of you guys journal. That's horrendous. I think last time I asked how many people are profitable. There are more people that are profitable than people that journal. What is going on here? Well, for the half people that don't journal, this stream is gonna be perfect for you because you're gonna learn how to journal here today. My headphones are actually about to die soon. I'm gonna try to lower my volume here so I can extend the stream as much as possible. Okay. All right, let me see if I can get my journal pulled up here and I'll show you guys exactly how to do it. Oh, this should be it. Yeah, I think this is the window. Hold on. Do you guys see the journal? Leave a comment if you see the journal on the stream. Let me know if it looks normal. Again, the journal is not free. You get it for free though if you buy the course. It's provided for all the course members for free now. Back then it used to be separate, but it's something I added as a supplement because I think it should help a lot of people out in their trading. I made a few changes, quite a few changes to the journal. I named also 2026 to distinguish that it's a new journal with some new stuff here. I'm gonna go over some of the changes real quick here. The first change is, I don't think I changed anything here. The first change really is I got rid of the buy and sell columns. Okay, no wonder why the stream was looking weird because this thing is not. Okay, let me move this up. And let me pull it below here. Does that look any better? Okay, that should be good here. All right. Yeah, that's cool. I got rid of the buy and sell. The reason why I got rid of buy and sell is the only reason you would have that up is to see if only buying or only selling has a huge win rate difference. And to me, I think it was like a 6% difference. However, keep in mind, different things have different trends. If something is downtrending and you're buying, that's not good. If something is going up, you don't want to be selling. So buy and sell is actually pretty irrelevant. The only reason why I had it before is so you can identify when you go in your journal, like which trade is which. Because if you have a screenshot with multiple trades, let's say maybe 5 or 6, and you got to figure out which trade goes to which trade. Well, a pretty easy solution is just looking at the risk reward. I realize if you look at the risk reward, unless you have multiple trades with the same risk reward, then maybe it might be hard to identify which trade is which. But what I think personally is it just clears things up, saves you time. Personally, getting rid of that column. It's not useful in terms of journaling. Another thing is also obviously making sure when you import your trades, have them in sequence. Like make sure your risk reward here, 1, 2, 3, 4, 5, or whatever, is in line with your screenshot 1, 2, 3, 4, 5 from left to right, top to bottom. That makes sense. If your first trade is 3 risk reward, second trade is -1, third is -1, fourth is +1, journal it like in the right sequence that you took the trades. Otherwise, if it's all over the place, you might be confused which journal entry is for which trade. Because sometimes you might want to go back to your TradingView screenshot and see to spot some patterns that you can get rid of from your trading. Can you break down gold for Asia today? I already broke it down earlier in the stream. If you go back in stream, you can find where I broke it down. It's very straightforward. Actually, I think that was yesterday, gold. I can't remember, but if I didn't break it down, that means I likely did not take any trades. If you want the sheet for the journal template with all the formulas, just click on that link there. It's the link to get the course, and you get the journal for free. Once you sign up and get the course, you get the journal included complete for free with all my past trades here. So you can even look through my data and how I trade. It'll help you out. EV calculator. Yeah, if you need a calculator, I got you guys everything, my boy. I really got everything. I'm telling you guys, like my goal ultimately for the company, ETU, is obviously to make it a one-stop shop for everything. Everything you need for profitability, journaling, backtesting, calculations. I don't know why it's not showing up the calculator here. That's weird. Okay. There's a link to the calculator. I just sent it manually. There's the EV calculator. I literally have it auto calculated for you. Just put in your win rate, risk reward, so you guys don't have to do any math yourself. Like, why do manual math nowadays when you can just build a system? Does it for you. There's even a prop firm's earning calculator at the bottom too. I had other calculators before in the past, but I got rid of them just because I wasn't working on them actively at the time, and it was kind of messing up with the website's length in terms of how much scrolling you have to do to go back up. So yeah, prop firm earnings, it should work. The iCalculator and your EV calculator. So prop firm earnings calculator, that's helpful to see roughly how much you can make from prop firms trading with specific metrics you input and provide. Varies from person to person's total leverage, and obviously like risk reward you make. But yeah, there's your EV calculator in there. Okay, so now going back to the journal. Nothing's I have implemented also some formulas to count the number of unique days. I already had this originally here, trading days here, active trading days. But what I did here is basically made it so that you can see all your data in one sheet. So instead of having to go to stats to get a big overview of your trades, you can just stay in your journal here and you'll see like all your data here. Win rate, average reward. So the first number here on the left is your average reward. The second number is your net risk reward. This is your expected value. This is number of trades per month on average based on the calculation of average trades per day. So I average about 5 trades a day, which sounds about right. Actually, that sounds actually a little bit lower, matter of fact, but depends on how many sessions you trade. But these are all the columns I have for my system. And account balance, once you get the journal, guys, don't touch any of the formulas. There's formulas in here. There's formulas in here and here. I already predefined and set these so they work properly. Don't change any of these numbers here. You can change the risk percent per trade up here. You can change it to 3%. Look, if I risk 3% from when I started trading here on my journal, from 109K balance, it will grow to 3 million. But keep in mind, this is, I think, half a year. And what's more important is actually the number of trades, not just the time here. This is 640 trades. So it took 640 trades to grow that with 3%. And I don't remember if this is compounding. I don't think this is. Is it? Wait. Actually, this might be. Wait, hold on. Maybe there's something wrong with the formula here because I don't think this is right here. Now that I look at it, this is a little. Oh, no, sorry. This is right. Yeah, no, this is right. No, this is right because 3% risk. Yeah, also got the percentages like 39%. That's 39 risk reward on a single trade, but I forgot the risk percent per trade is 3% here. Yeah, so this is right. Again, I would set it just at 1%. That's the default. Don't touch that for the most part unless you really want to change your initial balance. Don't change the formula here. If you want to change the initial balance in the journal template, go to here. Change this number, starting balance here, and it'll auto update over here. This references that cell. So you can see with a 100K balance after trading my strategy across 640 trades, you have $1 million. So you 10x your account size after about 600 trades. And this is not compounding, by the way. This is just purely, let me see, 3%, 7%. Yeah, this is purely just static 1% of initial balance. So if you compound your account, you actually grow it to more. But keep in mind, 600 trades is a lot of trades. Most people cannot make it to 600 consistently disciplined trades. Most people can't even make it to a week of consistency in their trading, like in terms of being disciplined and sticking to your strategy. So if you can truly stick to your strategy, if you have a good strategy like me and you can stick to it consistently like this is very doable. More than $1 million actually, if you compound, much more. This is also why journals are important. They show you numbers and truly how much you could get out of trading a good system. What's up, Aqua? You said, I don't know how you say your name actually. You have a 78% win rate with a 0.5 to 1 risk reward. That is about like a 0.6 risk reward. I don't like personally negative risk reward trading. Oh, that's not. I mean, going from 0.1, 0.5 to a 1 risk reward is a huge difference on your EV with this high win rate. It's like a almost 4 times difference. Let's take your average unit to 0.75. It's like about 70% at 1-to-1. That's what your system is equivalent to. That's pretty standard in terms of like the minimum I'd say you need to be profitable consistently. Your EV is about 0.5. Oh, you have an 88% win rate on 0.5. See, negative risk reward trading to me is not my cup of tea. It's you like think to get like an EV like mine, which is about 2.0 here. My low, usually my EV when it comes to my equity is like 1.6, 1.4. Average out here is 2.0. You can't even get a 2.0 risk reward with a negative win. You can't even get a 2.0 EV with a negative risk reward. Even with a 99% win rate, you can't get a 2.0 EV. You can't even get close. You can only get a 0.48. This is why like risk reward to me matters a lot, because it can help carry your EV by a lot. There's a lot more ceiling potential when it comes to risk reward because of how the math works when you inversely, what's the right word? You take the reciprocal of it compared to win rate. Win rate is just the opposite, but risk reward, if you take the reciprocal, it has a much bigger impact. Like, look, with a 70% win rate at 2 risk reward average, you can get a 1.1 EV, which you cannot achieve with any negative risk reward system. Anyway, let's go back to the point of EV is expected value. It's basically profit factor, but more accurate. It's how much money you make on average per trade. So if your EV is like 0.5, on average, you take the amount of money you risk. So let's say you risk $1,000, you're making on average $500 per trade, regardless win or losing. That's your average. All right, let's go back to the topic here of journaling. A few other things that have changed were, I'd say the most things changed were really the journal section here. This template here did not change too much for the most part. I should probably make these things stuck on a column like this. Yeah, I'll make those slight tiny changes later. It's just a visual change. It's not a big deal at all. But these are the columns here. And we're going to fill these columns out one by one. Now, real quick, before I fill it out, I'm going to explain to you guys real quick the importance of each of these columns, why I keep them. First off, kill zone. This is to track, your win rate of trades inside and outside kill zone. Now, I've added a filtering system now, so you can filter out trades quickly now. So if you just click on this thing next to the journal, and you just select outside, you see the win rate here changes. It's 63% win rate. By the way, the two numbers in front are just your number of winning trades and number of losing trades and your win rate. This is your average risk reward next to your total risk reward, net risk reward secured. So you can see how filtering by all outside only trades, kill zone, my win rate is 62%. Let's see what my win rate is inside of kill zone. 68%. So now to me, a 6% difference in win rate is not too significant. I'd say if you see a 10% jump in your win rate when it comes to optimizing, that is very big. Now, why do I say it's very big? Well, look. If you put in the EV calculator, do a 50% win rate at 2 risk reward. That's standard baseline. Now change the win rate to 60%. See how much percent your EV jumps. It jumps from 0.50 to 0.80. So your EV lead, your profitability, like how profitable you are, lead jumps 60%, just off a 10% difference. So don't undermine a 10% difference in win rate over long run. It's a huge difference. You say 6%, let's see what that is, the difference. So 50% at 2 risk reward is 0.5 EV. You go to 56, 0.68, 0.5. So yeah, your profitability still jumps a good amount, 36% up. So that's still good. But it could be also due to randomness. Now, the more data points you have, the less randomness effect each trade will have. Therefore, this is, you could say, still somewhat pretty significant. But I'd say 10% is where it's a deal breaker for me, where if I see something that filtered in my journal that would make a break a 10% win rate difference, I'm implementing that. All right, so now let's select everything here. Again, this is a new thing I added, the filtering, by the way, so you can also filter by trades. Now you can see I also have the winner here, inside kill zone 60%, outside 62%. Only difference now is that you can see each individual trade here filtered out here using this, and you can see it here instead of having to go to stats now. This might also help you determine combinations of trades and determining what works best. I'm gonna turn off the so this looks like cleaner here. Yeah, this looks much cleaner for stream. Again, these ratios above, they're pretty straightforward. Inside kill zone, outside kill zone number, percent inside kill zone. You can look into the formulas. You should be able to see the formulas, I believe. Yeah, you will be able to see formulas. Just when you get a chance, if you buy the course, just go file, make a copy. And then you'll have your own copy of this entire journal in your hands. Yeah, of course, high EV is better. But keep in mind frequency too, like net risk reward you make. I don't want a high EV system if it only gives me 2 trades a month. Now, session, of course, you can look at the win rate difference between sessions. Look, my New York session win rate on average 62%. Let's look at Asia. Asia 65%. London is 75%. It's actually higher. Now, when you look at like your data here, you need to factor in I think I just lost connection. So we'll see if we get the stream back here. All right, let's see. All right, put 1 in chat if we're back. So yeah, I want to look at that data there. Make sure its number of sample size is good. You can also filter by POIs. So if I look at my liquidity sweep win rate, my liquidity sweep win rate is 64%. My origin win rate is 69%. I think flip inducement is going to be the least. But look at the number of trades I'm taking for inducement. Not that many. 19 trades. So this is hard to compare. But I just know in general, from my trading experience, inducement is going to have the lowest win rate out of all these POIs. That's why I have the POI type as a filter. I also have setup type as a filter because it's obviously like what strategy you're trading, what entry model. For me, this is an entry model, or sorry, not just an entry model, because stop hunter is a different strategy. But you guys get the point here. Now, what is this column here? This is a very important column I added recently. This is what I call your tilt meter. And we'll keep it blue for now. What it means is basically how often you're taking random emotional trades. So you guys see like where it says R. R stands for emotional, or sorry, it stands for random. Lego blocks. I don't know what Lego blocks are, but that's LB, not OB. Anyway, I just have it as a letter because it stands out very clearly. R just means emotional. or random, aka tilt trades. Look at it. If you change it to R, my formula I put in here will automatically highlight these columns red so you can know which trades are R. They stand out a lot. And you can see the more R trades you have here, the more the tilt meter goes up. Tilt meter has gone up to 5% now. So it does do the calculations very fast for you. Ideally, your tilt should not be at 10% or higher. If you're making emotional mistakes 10% times, that's very high. That's not good. It should ideally stay below 10%. 1 minute structure is my internal trend. That's candle to candle. I made videos talking about that in the course. 5 minute, 15 minute structure, external trend. Again, I made course videos talking about structure and how to distinguish between these two. Entry screenshot. This is where you obviously put in your trading view screenshot of your trades. Very straightforward there. Are secured. Obviously, risk reward you made or lost on the trade. Look, guys, don't change the formulas. I'm telling you. All right, I have the formulas coded and everything already perfectly here. I don't think the original journal even had formulas like as sophisticated as mine. I'm pretty sure. It's been a long time since I touched the original one. But if you put a 0, look, it automatically goes to break even. You see all the numbers here change. So do not change the formulas here. Don't waste your time typing W or break even in my journal. I don't want you doing that. That's why I built this system for a reason. If you put -1, it will turn into an L on the right side, as you can see. Even -3 and -4 it turns into L automatically. No reason for you to manually type in W or L. So this journal template will save you as much time as possible. It looks like a lot here to fill out, but it happens. You can fill it out very fast once you know what you're doing. Break-even trade outcome. Why do I have this? Well, this helps me determine, was this a good break-even? Meaning, aka the price later ran to stop loss, it prevented loss, or was it a bad break-even? It hit my break-even and later ran to TP. I keep track of this data point, and it just does have a win rate threshold for you here, and the average restore threshold here as well. I think that's going to be kind of hard to explain there, so I'm not going to go in depth into that here, but break-even system used. Again, just comparing structure break versus 50%. I think 50% is the second number. Yeah, so majority times I'm using structure break for my system. I know there's some students that love the 50% to TP just because it's, you could say, argue more mechanical. So that's fine. But this is where you choose break-even system to use. And then this is my scalping column I recently added in. So this is tracking your scalping win rate. Oh, whoops, should not do that. It's basically determine what your win rate would be if you're just going for one-to-one trades. So for people that prefer quick trades, very fast in and out, and high win rate, you want to look at this column because this might help you determine maybe you want something that's high win rate instead of high risk reward. Did I catch majority of the move? This is just for me to optimize my trading to see how often I catch majority move. You can see I only catch majority of the move 55% of times. You want to mechanically identify trades too. How I mechanically identify majority move is 75% of the final move or more before break even gets hit, aka my entry point. If not, how much I run. On average, my trades do at some point hit a median of 8 risk reward, which is pretty damn high. I'm gonna keep it a buck. So there is that as well. Then my entry, I made a drawdown. This is for me to keep track. This isn't as important, but I'd say the most importance of this, because I know not everyone trades the same strategy. Ideally, like if you have access to this journal, you'll be trading my strategy because you have the course literally, or a mentorship. This is to see how precise your entries are. If you're having a ton of no's here, this means your entries are not precise and you want to improve. It just tells you basically you have a lot of wiggle room to improve on getting your entries better. And that will improve your risk reward without this will not negatively impact your win rate. So this is good to have. This is a new comment added for my daily bias indicator. If you guys want access to indicators, there's a free trial here for 7 days right now, also on the WAP now. I finally was able to activate it before. There's some glitch in the system, but now it's fine. So you can go there, you can sign up for a 7-day free trial. They are TradingView indicators that I use on the daily that you guys see in all my videos on the charts. They mark out a lot of my PYs, everything basically automatically for me. But basically this is determine, you know, like how often my daily indicator bias is helping my trades. How am I gonna use this filtering? Well, once I get a lot of yes and no's, right? Then I'll just filter by yes or no. And I can just look at the win rate here. Let me see. There, 50% win rate for yeses. Let's say it did not align with bias 100%, but this is obviously just one trade. Just giving you guys an example of what I mean. So this can help you filter out, determine if my indicators are helpful or not. From my data back testing previously, it should improve your win rate by 5 to 10% with the daily bias. If you train my strategy, setup rating here, I've added an extra A plus now and B plus now, so you can distinguish between the 4 different ratings. This is where you can make this either discretionary or mechanical. I teach my students in the mentorship the mechanical method of determining your setup rating to distinguish between A plus, A, B plus, and B.